Are we in the bottoming process for this stock market sell-off? Alarmists are warning our house price bubble is set to burst again, and they are shuffling the deck chairs in the C-suite. I'm Peter Switzer, he's Paul Rickard, and we're mad about money. Well, Paul, the big question is, we've seen the stock market go down, then we saw a nice rebound last week. Wall Street was pretty ordinary overnight. Is this the bottoming process, or should we expect another leg down?
Well, I think, Peter, we probably haven't seen the bottom yet. I think there's still more work to be done on both sides. So, look, as you wrote about on Monday, the most likely outcome of last week was a bear market rally. But, you know, the market will bottom, and and will take a little while. That's usually what happens with these things. So I guess, 50-50 bet, part of the bottoming process, more work to be done. But I think the market, until we actually see signs that inflation has peaked and or that the Fed has gone hard enough, and the recession is not necessarily going to be as bad as someone fear, it's going to be a little hard for the market to find a true bottom. So I think we're in a choppy couple of months, Pete. I reckon this is a time to be patient, use down days as buying days, but I think, just be sparing. You can afford to be a little bit greedy on the bid side at the moment.
Yeah, I think it's like with Wimbledon on, it's a tennis game, isn't it? Tennis game between recession and inflation. And, overnight in the US, they got a lower consumer confidence number, as you'd expect, because they're raising interest rates over there. But at the same time, they got a high inflation expectation number. So one was saying recession, consumer confidence going down. The other one was saying inflation expectations, inflation going up. We won't know for 1 to 2 months. And I reckon, Paul, by about mid-September, October, that's when the market will get a clear indication whether it's time to buy or time to sell. So I think we're stuck in this volatile up and down situation for the next month or two. But then I do believe inflation will be peaking. And I do think that the Fed can avoid a recession, and that's going to be good for stocks. But we have to wait and see. That's my best guess.
Yeah, and I've always warned, Peter, we've always warned, this is a funny week in the Australian market, the week coming into the 30th of June. Yeah, you get a window dressing, you get fund managers who are clearing the decks, you've had tax loss selling. I just think this is a week just not to read too much into the market, because there's lots of just little things occurring that just do funny things to the market. So I reckon
historically, Paul, you say in July there can be a bit of a comeback because the people who sold then turn around and buy again.
Well, can there be a bit of both? Because last year on the 30th of June, I think the market rallied 2 or 3%. So you can get both things happening here. But I think just needs a little get through this week first to see how things pan out. That's my sort of bottom line here.
And Paul, alarmists again telling us the house price market and the bubble is going to burst. What do you reckon?
Well, they're always alarmists in the property market. They don't get any publicity unless they preach doom and gloom. I think what we've seen before, Peter, is what happens. The equities markets tend to move first. We've got the interest rate market, obviously higher interest rates, and then eventually, we're going to see some softness in the property market, probably more as buyers pull back and sellers just to get a bit keener to sell. That's how markets change in price. So, look, I'm not predicting doom and gloom, but there will be some softness. We've already seen that data show up. Auction clearance rates are down. We've seen time on market blow out a little bit. Yeah, and this is going to be a buyer's market. So I think if you're looking to buy, you can just be a bit more circumspect. And if you're looking to sell, you're going to have to be a bit keener, and that's what'll move the price down. But talks of 25%, 50%, utter nonsense. Just alarmists looking for a headline, and they only come out in these type of environments. So just be really cautious. I think that the history of property markets in Australia is that, pullbacks, can last a while, but they're not big. And it's more around, as I said, just the sellers getting a bit keener and buyers just being a bit more circumspect about having to hit the offer, right? So that's my tip, Peter, and don't be surprised if you get a bit more weakness, but we're not going to see a catastrophe in the housing market.
Yeah. So we've got Chris Joy saying 30%. ANZ's property team think 20%. I think the consensus is more around the 15 to 20% pullback, which makes a lot of sense. Sydney prices were up 55% in 3 years, Paul. But I think the bottom line is if the Reserve Bank and the Fed can control inflation without too many interest rate rises, and there are going to be interest rate rises, but not too many, then we might see house prices falling by a lesser amount. The bigger the interest rate rises, the bigger the price fall. But I do think, as always, there are people out there, and there are people like Jeremy Grantham from Boston, from GMO. He's been tipping a house price collapse in Australia for at least, I would say, 20 years, and he hasn't got it right. And I think he doesn't understand the Australian market all that well. And I also think a lot of these numbers out there, Paul, at the story in the news, in news.com.au this week, compares us to New Zealand, which might be fair enough, but Hungary and Czechoslovakia, very different economies, very different markets. I don't think the Chinese are desperate to buy in Czechoslovakia and Hungary, but they are very happy to buy in Australia. I think the bottom line is that over time, the house price market in Australia will be actually helped by the fact there's a big buffer of people who've been overpaying their mortgages for a long time. And a lot of these numbers and these analysts ignore the fact that big buffer's there for a lot of the home loan borrowers. Let's go to the final one, Paul. Some CEOs are moving, and you got a very interesting take on this.
Yeah, look, Tyro CEO Robbie Cook is moving to take up the role at Star Entertainment. So look, for Robbie, who I know pretty well, it looks pretty like a pretty good career move. I mean, Star's in a mess, but it's a high profile, bigger company, and probably just upside if you can. You've got to expect that Star, I think, will go the way of Crown. That is, it's not, there might be some changes around the license, but at the end of the day, there's a pretty strong core business there. And okay, board will have to change, new management team, which Robbie's part of, all those sort of usual things will happen. But just as we've seen with Crown, at the end of the day, there's still going to be a business of running a casino in Sydney and Brisbane. And I reckon Star will continue to be that operator. So
it's interesting, Paul. Crown's share price has gone up, hasn't it, since all the reorganisation and the new appointments of CEOs and whatever. Do you think the same will happen to Star?
Yeah, I mean, Crown's now been delisted, but yeah, you're right. It went all the way back up to the listing to the takeover price. And I think the same will happen with Star, right? This is just a question of, I don't think the state governments really, they need a casino, right? Because they need the revenue. So someone's going to operate it, and the chances are that's going to be Star. So my take is that there'll be some punishment for the company. Shareholders will do it tough for a little while, but and as we've seen with Crown, this company will survive, and it will continue to operate casinos in Sydney and Brisbane, and they'll continue to make good money out of it.
Yeah, it's going to be interesting to see how the market reacts to Robbie leaving Tyro, because Tyro was a high flyer. It's been challenged by the tech sell-off. It's going to be interesting to see, I guess, whoever is appointed to take his place and how the market reacts to that appointment. Anyway, let's wait and see. I'm Peter Switzer, he's Paul Rickard, and we're mad about money. Shh.